Tesla just crossed the point of no return. Cybercab production has officially begun. Not a concept, not a prototype, actual vehicles coming off a real production line. And that single fact quietly changes the long-term story of Tesla in a very big way. Hi, this is Ken. Today I want to walk you through 3 developments that, in my view, are far more connected than they might look at first glance. Cybercab entering production, Tesla dropping the autopilot name in response to regulators, and Model 3 being named the top-rated EV for 2026. This isn't a news recap. This is about understanding where Tesla's real value is forming, where risks still exist, and how all of this ties into Tesla's long-term trajectory as an investment. If you're a Tesla investor or long-term believer, I think this video will help clarify where we actually are in the journey. Let's start with Cybercab. Tesla confirmed that the first Cybercab has rolled off the production line at Gigafactory, Texas. This is a much bigger deal than most headlines suggest, because Tesla has talked about robotaxis for years. But talking is cheap, production is not. Once something enters manufacturing, it moves from theory into execution. That is the line Tesla just crossed. Now, to be clear, this does not mean millions of Cybercabs next year. Early production is always slow. Every major manufacturing program follows an S-curve, very slow at first, then gradual improvement, then rapid acceleration. As investors, we need to hold 2 ideas at the same time. 1, Cybercab has officially begun. 2, Cybercab is still in the earliest phase. Both are true and both matter. Now let's talk about the number that really caught my attention. Elon Musk said Tesla is targeting a sub $30,000 price for Cybercab by 2027. If that happens, this is not just another EV. This becomes a structural disruption. Think about what a fully autonomous vehicle at Model 3 pricing actually means. It means cost per mile that is lower than owning and driving a car yourself. It means vehicles that can generate income while you sleep. It means transportation shifting from a product you buy to a service that runs continuously. This is not just selling cars. This is selling access to mobility. That is a completely different business. And that difference is still not fully reflected in Tesla's valuation today. There's another important question that hasn't been answered yet. Will Cybercab be sold to consumers without a steering wheel? Or will Tesla eventually offer a version with manual controls? This decision matters because it affects regulatory approval, insurance models, and how fast Tesla can expand globally. If Tesla chooses a hybrid approach where a consumer version has controls but robotaxi fleets do not, adoption could accelerate much faster than people expect. Personally, if a $30,000 autonomous Tesla became available, I wouldn't hesitate. Not as a toy, not as a novelty, but as my primary vehicle. And I suspect many of you feel the same. Now let's shift from future promise to present reality. Tesla disclosed that 5 minor low-speed incidents occurred during robotaxi operations in Austin. No injuries, minor property damage only. Some people see this and say, see, autonomy isn't ready. But I look at this differently. These incidents happened in autonomous mode, which means Tesla is actually testing in the real world. This is what progress looks like. Messy, imperfect, incremental. FSD is improving, but it is not complete, and expecting perfection at this stage is unrealistic. As investors, we should expect volatility, we should expect negative headlines, but we should also recognize that deployment itself is the milestone. At the same time, Tesla removed the autopilot name from its marketing. Many people see this as Tesla backing down. I see it as Tesla getting smarter. The biggest existential risk to Tesla is not a software bug, it's regulatory shutdown. You can fix software. You cannot easily fight governments. By adjusting language, marketing, and product framing, Tesla is choosing a path that preserves forward momentum. This is extremely important. It increases the probability that FSD and Robotaxi continue moving toward scale, not at maximum speed, but without being stopped. For long-term investors, survival plus steady progress beats reckless acceleration every time. Another regulatory wildcard is China. There are discussions about restricting vehicles without physical buttons. If implemented strictly, Tesla may need to adjust interiors. But here's the key point. Tesla is vertically integrated. Tesla controls hardware, software, and manufacturing. If changes are required, Tesla can adapt faster than traditional automakers. Regulation does not automatically mean defeat. It means iteration. And iteration is one of Tesla's core strengths. Now let's ground ourselves in the present business. Edmunds named Model 3 the top-rated EV for 2026. This matters more than people realize, because Tesla's valuation is not supported only by future AI dreams. It is supported by real products generating real cash today. Strong EV sales fund autonomy, strong margins fund AI. Strong customer satisfaction keeps the flywheel turning. Model 3 being recognized for price, efficiency, performance, and build quality tells us something important. Tesla's foundation business is healthy. That gives Tesla time, and time is incredibly valuable in deep tech transitions. There's another subtle but powerful signal. Ford Motor Company announced it will adopt gigacasting and 48-volt architecture in future EVs. Those are Tesla design philosophies. This tells us Tesla is not just competing. Tesla is setting the template. The strongest companies don't merely win market share, they redefine how products are built. When competitors copy your architecture, your moat deepens, quietly, over time. This brings me to how I personally frame Tesla's future. I think of Tesla as a three-stage rocket. Stage 1, profitable EV sales. Model 3, Model Y, Cybertruck. This stage already works. Stage 2, FSD and Robotaxi monetization. Still early, still messy, but now moving into real-world deployment. Stage 3, Cybercab plus AI-driven mobility infrastructure. A world where autonomous vehicles are cheap, abundant, and always available. Short-term stock price movements will be driven by news cycles, accidents, regulation, quarterly deliveries, but structural value is driven by trajectory, and Tesla's trajectory points toward becoming a mobility infrastructure company, not just an automaker. That distinction matters enormously for long-term valuation. So I'll leave you with two questions. Do you believe $30,000 autonomous vehicles become mainstream within the next decade? And if they do, is Tesla worth what it's trading at today, or something very different? Let me know your thoughts in the comments. I read them all. If this video helped you see beyond the headlines, please hit the like button and consider subscribing to Life in the Future. We don't just talk about Tesla news, we analyze where the future is forming. Thanks for watching, and as always, think long term. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.